Welcome to Lithium Ion Rocks on Rockstock Channel, episode 32. Today we have Arne Frandsen, the managing partner of Pallinghurst, a major private equity fund. As a reminder, my partner Rodney and I and RK Equity are not financial advisors or broker-dealers, so nothing you're going to hear today is financial advice. Please do your own research and note the disclaimer at the end and also on our website, rkequity.com. If you haven't already done so, please subscribe to Rockstock Channel and click the bell so you can be notified immediately of all future episodes. Please join our growing list of Patreon sponsors at patreon.com/lithiumionrocks. It is December 9th, and we are very privileged today to have Arne Frandsen, the managing director of Pallinghurst, a major private equity fund heavily invested in the battery materials space, including in Nemaska and Nouveau Monde in Quebec. But the company has a long history that Arne is going to introduce a bit, his background and his partner, Brian Gilbertson, and the history of Pallinghurst, and more importantly, the kind of present and the future. We're very excited to kind of have this conversation. We've been in touch over the many months of the Nemaska, saga, which you've now officially taken over the keys. New Nemaska, which I call NEWmaska. But there was a period of time I wrote a note called Jupiter's Halo in July of last year, so nearly 18 months ago, when you first came in, planning to do a rights offer in partnership with Investment Quebec, which is invested in the company for up to $600 million. And a lot has happened. We've done kind of podcasts, what went wrong, Nemaska, et cetera. We're not going to get so much into that here as focused kind of on the future, but why don't we start first with kind of your backstory, how you came to doing what you're doing, and then we'll take it from there.
Sure, Howard. Thank you for having me. Well, it's very logic, isn't it? A guy from Denmark where there's no mining going on, he should end up mining battery materials around in Quebec and in Africa. But that was the way the cards were dealt. I always, since I started studying law, I loved mining. I studied law in Denmark and in Japan and in South Africa, and I fell in love quite early with the resources space and found that was where I wanted to spend my time. So even as an investment banker at Goldman Sachs and JP Morgan, resources had my fancy.
Arne, I remember as a young man, Brian Gilbertson being a big heavy hitter in South Africa when I was starting out my career in the early 90s. Can you give us some color about his history and in the what we would call clean energy for the old internal combustion engines, and how you came to sort of partner up in assets in Africa?
Yeah, Brian is obviously one of the big gurus of our industry, and besides creating BHP Billiton, he created the largest aluminium company. He created the largest company mining company out of India. So he has been very active in our industries for many years. He is an applied mathematician and a very intellectual person, and he has a strategic insight to the mining industry that very few people have. I met Brian the first time more than 25 years ago. I had just started at Goldman Sachs, and the first meeting I had, I was the junior bag carrier, and on the other side of the table sat Brian Gilbertson. And we have been in contact, and first when I stayed in banking for 12 or 13 years, I worked with him on a number of different transactions, and then we ended up where we together created what at that stage was the largest black-owned company mining company in South Africa, called Inkwala. And I was the CEO, became the CEO, and Brian the chairman. And after that, we decided on creating Pallinghurst together. And we are still together, and our partner Andrew Willis is there as well. We started off initially raising $2 billion, which we put to work in a number of mining companies. We have been in Australia, in Canada, also before now, and in Europe and obviously Africa. We have had a number of successes. One of them was in manganese. So we made that investment, and over the past decade, it really came from a piece of felt to today, one of the largest manganese operations in the world, the lowest cost quartile, and it will keep on producing manganese for the next 60 to 70 years at least. Well, from an investment point of view, it has been close to unrivaled success. We put in a couple of $100 million in developing the mine. It has already paid dividend to shareholders that is a multiple of that. Half of the mine is listed at $600 million and has a dividend yield above 20.
And can this mine make high purity manganese for the battery materials industry?
It's definitely a possibility. It has some of the most consistent and clean manganese in the industry. And it's basically the Mamatwan quality that has been produced out of the old Samancor mine right next to us.
Interesting. Okay. So you have a lot of manganese experience there, and Brian Gilbertson has a lot of platinum experience, which, as Rodney said, is internal combustion engine kind of car focused. But Pallinghurst announced last year this partnership with Traxys. Could you maybe talk about the thought process, where your focus is, and why, how are these metals maybe different than manganese and platinum?
Howard, I would say 4 years ago, we took our team back from doing deals and put them back on the school bench, because we saw clearly that the trend that everyone is jumping on today about battery materials, that the lithium and the graphite of the world would become extremely important. And to date, we have invested just under $2.5 billion. We've been around for 15 years. We invested on a number of different continents. We made the decision here now going forward that because of the particularities around battery materials and the importance of showing provenance and being able to demonstrate not only green credentials but also credentials in respect of where the different products originated from, that we made the decision that we will only invest when it comes to battery materials in AAA or AA countries. And that means that we will not invest in South America, we will not invest in Africa when it comes to our battery materials.
You are focused on hard rock. Have you taken a view on clay or traditional brines or unconventional brines in your thought process as well?
Yeah, it's a funny thing, because for the untrained eye, you will say, well, it's easier to extract from clay than it is from hard rock. There's a very good conventional wisdom that you either want things in liquid or in hard. You don't want it somewhere in the middle. And we have spent a lot of time looking at clay, and we personally reached the conclusion that it was not for us. We like hard rock. The brine issue is I think one that one has to be, I won't say careful, but you need to take a view on it. Personally, I did not get comfortable on the concept of interfering too much with the water table. I think that has implications for your environment that you operate in. And you will not get a lot of local friends in the farmer community if you suddenly lower the water table significantly through your activities.
Interesting. So understood that those are issues that are well flagged in the market about, I guess, conventional brines. But I'm curious about the clay aspect, because Tesla has been talking about, possibly doing clay. Lithium Americas has a very large market cap. Bacanora and Ganfeng seem to be pursuing that. What did you learn from your diligence of clay that made you pause?
To me, it's the level of certainty that you can have that it actually can work and that it can be extracted financially viably and in a quality that is consistent and at the level you want to do. The extraction from hard rock is well proven. The extraction from brine is well proven. The extraction from clays, in my view, has still some way to go. It might be that it will work well, and I wish those projects you mentioned before all the best, and I'm sure that very smart people will apply their minds to how that can be done. Personally, I am a big spodumene fan, and I believe that taking that and upgrading that and providing the flexibility of producing carbonate or hydroxide is a premium proposition, at least for us.
Would it be fair to say, Arne, what you're saying, I mean, essentially, if one looks at it, is, on the operating cost curve, you can get to where you need to with well-established and conventional flow sheets?
One thing that Brian told me was that if something works, don't try and change it. And mining has a lot of uncertainty by nature. There are a lot of things that you cannot control. To take spodumene and turn it into highest quality hydroxide and carbonate and deliver a consistent high quality product is a proven technology. And there is no issue with that. If you find, like in Nemaska in Webushi, arguably one of the best deposits in the world of spodumene, well, then you're starting off from the right point of departure.
I was about to ask that question because there definitely seems to be a correlation between the quality of the spodumene concentrate and the levels of impurities and then the end product.
It all starts in the ground. But if you can pick a high quality spodumene deposit of a big size that will allow you to mine for more than 40 years, that is for me where I will start my journey. You can never fix that. If that's not there, you will never be a success.
And we've heard that as well from Luc Kassam at Albemarle, that everything starts with the resource. And at Webushi, you're starting with a 1.4% grade. Before we go into Nemaska and that, could you just, I guess, talk about the attributes of Quebec? You're in with Nouveau Monde and now with Nemaska. So all the money that you're investing, I guess, in this new version is in Quebec.
When we did our research into battery materials, and we quickly identified Nemaska and Nouveau Monde as being the two assets that we really like to get into. But it also allowed us to start a dialogue with the government in Quebec and with IQ, the big investor in Quebec. And it was very clear from the outset that we had a lot of common ground. We viewed life the same way when it came to electrification, when it looked to proper governance, when it looked to using hydroelectricity, and it looked to the government being supportive of this segment of the economy. A natural partnership. We sat with Minister Fitzgibbon very quickly, and it was clear that his vision for how electrification can take place in Quebec was very compatible with what we wanted to achieve. So we found a great jurisdictions, obviously some fantastic universities, very high level, highly skilled professionals, and an understanding for mining. So it ticked all the boxes. And the more we spent time there, the clearer it became that this was really a premium jurisdiction for us. And it was also a jurisdiction that where it was generally exciting. We had some real world-class assets. And if you then put that with Hydro-Quebec and the ability to deliver zero carbon footprint electricity, you suddenly got some tools where you can create something really spectacular.
So on Nemaska, you came on the scene in July of last year. You were going to backstop a rights offer, I think at 25 cents. But then a lot of events unfolded and the company ended up going bankrupt. I guess what happened, it was always subject to due diligence, the rights offer. So what did you uncover, I guess, in the diligence from the time of the rights offer announcement to the time of, I guess, the bankruptcy, and now it's 18 months from your first coming on the scene that you actually physically are taking the keys?
We spent typically 6 to 9 months doing due diligence. And our philosophy is it's not a question about how much we invest initially. Whether we invest $1 or $1 billion, it is the same thing we go through. But then the company will also get a financial backer that is not skirmish, and if things doesn't go right, because guess what, in many mining projects things are not going to go right all the time. So we go in and we are in for a penny, in for a pound, and that's how we conduct our due diligence. So it was quite unusual in the Nemaska situation that we went out and went public about what we want, that we were interested, because typically we would have done our 9 months due diligence before it became public. So everything was always subject to due diligence. And as we did our due diligence, it was very clear that in Wabusha there is an absolute world-class asset. It's also very clear that the P1P plant that is producing the hydroxide has demonstrated the ability to produce something that off-takers would really like, and off-takers were willing to enter into agreements with. It just became very difficult when there were a number of agreements that were not commercially viable from our point of view. Some of them were off-take agreements, some of them were financing agreements, some of them were undertakings to deliver spodumene, where maybe it would make more sense to take it up the value curve. So there were a number of decisions that simply made Nemaska, from our point of view, uninvestable. And it is very difficult. I mean, obviously, if the company needs a significant amount of capital, and you mentioned that it went into a CCAA situation. I mean, obviously, it's not viable for Pallinghurst or IQ to put money in that doesn't go to developing the mine, but goes to pay creditors out. So unfortunately, after 6 months of due diligence, the conclusion was that it was not for us to invest into the structure at that point in time. The company then went into a CCAA process, or equivalent to Chapter 11 in the US, and we participated in that process. But there's nothing that has changed from the beginning. We clearly stated that we liked the assets, and we were looking for a structure where it would make sense to invest in. And it is very regrettable, and I genuinely feel sorry for the shareholders that lost the money that they've invested into the company. But from our point, it was simply not possible for us to invest into a bankrupt structure, because that would prevent us from using our money to developing the mine, what it really should do. So with the company being going into CCAA, we teamed up with IQ, and we jointly made a bid for the asset. And the idea is then to take the asset and then develop the mine and the hydroxide plant that goes with it, but to be a fully integrated producer of battery-grade lithium.
And Arne, It was quite interesting, with Livent having a track record of a single acid Argentinian brine, to stating a preference for that and then suddenly pivoting away from that and now looking to participate in a hard rock asset in obviously a very solid jurisdiction. Can you tell us a bit about how that all came about and your thoughts about having them as a partner?
Paul and I are educated in the same kind of mold, in the same type of bank, and so I think we started off both as bankers, so we have a lot in common, and we had a dialogue quite early on. He's a formidable CEO, and we had a good discussion about the difference between hard rock and brine, and how we could see things going forward. You can't take away from Livent that Livent and its predecessors have 60 years of experience when it comes to producing lithium and battery grade lithium, and that is some very good skills and some very good knowledge to have, and it became quite clear that we would benefit from working together, and for that reason we invited them to become an investor with Pallinghurst into the asset that Pallinghurst and IQ have a 50-50 partnership in. So they became an investor into Pallinghurst, and they are our partner now as we take it forward. They have a formidable team and some very highly skilled people with the relevant experience. So if you want, what you said, Howard, we now have some more white coats in addition to hard hats.
Yeah, and now we have two silver tongues from Goldman Sachs.
And Arne, in terms of capital commitments, what is Pallinghurst in for now that you've got Livent in as well?
If I was a betting man, I would say that today $1 billion will be required.
50% of that's IQ, and then the other 50% is half you and half Livent, right? So does that mean Livent's in for $250 million?
But Livent is an investor with Pallinghurst. So if I say Pallinghurst is in for that amount, that also includes any contribution from Livent as well. Of course, we love IQ to be in for 50% going forward, but it's not really their model to put that high amount of capital in. So I cannot talk for them, but I wouldn't be surprised if they would be looking to us to provide a significant part or the lion's share of the capital that will have to be put in. We have a 100% track record in Pallinghurst that projects we invest in, we bring all the way to production and all the way to nameplate. And that's going to be the case here as well.
What is the plan? Maybe too early, but again, going back to Livent's public statements, and your statements here are, I guess, the first, new insights into the project. I mean, Livent basically said they were owed $10 million plus $10 million of penalties, so they were a secured creditor of $20 million. And they said over the next 6 months, they're going to invest like $10 million or so, up to $10 million to, I guess, optimize the mine plan over the next 6 to 9 months. They hadn't made a decision which technology to use, whether or not they do carbonate or hydroxide. So there was a lot of to be seen in the future. So any additional kind of color, like $1 billion, is that for 20,000 tons? Is it 40,000 tons? Is it hydroxide? Is it carbonate? Are you going to use NEWmaska's process? Are you going to use something like a sulfate-free, like Odutech, or something else? Or is it going to be in Shawinigan or somewhere else? Could you add any color to that?
Well, Howard, you ask exactly all the right questions, because these are... And I just want to remind you, I got the keys last week, okay? So if I had all the answers to that right now, it would be pretty formidable. These are, of course, the questions that we need answers to. I did, of course, know what Paul said in the announcement of their quarterlies. It has been very clear Pallinghurst has been doing due diligence on this asset for 18 months. So we know the asset, I think, relatively well. We understand the challenges. For us, it starts, in some way it all starts in the ground, as we talked about before. But I actually like to put that on the head. What I said to the team was there is one customer for the mine, and that's going to be the plant. So now we're going to determine what kind of plant are we going to have, how big is the plant going to be, when is it going to receive its material. When we have all of these answers, then we go back and then we start saying, in Wabushi, what do we need to mine in order to feed the plant? Because you can import spodumene and then put that in the blend, but if you want to have a consistent and a very homogeneous product at the other end, the benefit of having it all coming from one source, going through to one process and delivering something out at the other end is quite significant. So from our point of view, the mine will produce the tonnage that is required for the plant. And whether that is going to be the 37,500 100% hydroxide, as was the latest, just remember that plan has also changed a number of times within Nemaska's history. I mean, they were initially going to sell spodumene, then they were going to do spot carbonate and hydroxide, then they were only going to do hydroxide. So those are the same considerations that we are going, or we need to form a view on. So the first question, I think you're right, is what about the technology? There are a number of IPs, there are a number of great benefits in the technology that where we have acquired the IP to that now. And we have a P1P plant that obviously has produced quite a material amount of material, which has been tested by off-takers and they like it. So we come from the premise that this is a very good technology. However, if you are about to invest up to $1 billion in a project, you kind of should look around to be absolutely 100% sure that this is the technology that you want to use. And there are a couple of alternatives. And we will benchmark all of the different technologies and we will make a decision as to which one will be the best. And it doesn't mean that we can only do one. Just remember that. We don't need to build a plant tomorrow that is 37.5 or 40 or whatever it is. If we can create modules, that might be the way to go. So it might not be 40,000 step one, it might be 20 first and then another 20. That is what we together with our partners will sit down and determine. We will put a business plan together that can demonstrate a solid return that meets our criteria based on a business plan. I said once that in life you can get second chances, but it's very rare that you get third chances. Obviously, the Nemaska asset went through the CCAA, so in that way it had its first chance, and the second chance is now. And we will do our utmost to make sure that it's becoming a great success and it becomes a fundamental element. I don't need to tell you the importance of lithium, but a critical part of the battery materials platform in North America. And we believe that Quebec has a lot of the attributes that could make that very successful.
What sort of long-term battery quality hydroxide price would you be happy to use in your modeling when you work out the feasibility of projects like Nemaska?
There are a lot of factors that goes into that, so I will take the fifth on that one. But it has to make sense for both parties. And the thing about lithium hydroxide is, yes, it is a quote-unquote commodity, but it is actually a specialty where you develop a relationship with a number of end users, and when you have entered into that agreement, they know what they can expect from you, and you have an agreement what you can respect financially from them and what quantum you take. And it's developing that partnership that I think is very critical. I mean, one of the big attractions to me in having Livent in as a partner is that they have a proven track record with a lot of lithium users.
That was going to be my next question, is whether or not you would market under their sort of banner or go on your own or leverage off, your joint relationship.
Yeah, I think our joint relationship is key here. I mean, the marketing will come out of our joint. It will not be through them, so it will be our joint effort.
I mean, it's interesting. You clearly see it the way we see it, and how the major incumbents continue to reinforce the theme on their quarterly calls. Is there's definitely a situation where it's not simply you put it out, widely for sale. It's definitely working with, building partnerships with downstream customers and who have very particular needs. I understand, they're different from one another. So it's definitely a partnership all the way down the chain.
Yeah, it really is. It's bespoke. If you can create that special relationship with an end user, that means that the quantum, we have certainty as to the quantum that is going to be delivered. We know exactly what quality they want, what impurities they are afraid of, and what they need to put into their quote-unquote black box when the batteries are being made. And if we can deliver that and take uncertainty out, and we can deliver it just again out of Quebec, where it is all using hydroelectricity. It's green, it is sustainable, and it is. I mean, if you look at a map, I mean, from Quebec to Buffalo is a short train ride. So you can get the material into the US very easily.
Two more questions. One of your partners, Traxys, and if you can kind of talk about them to the overall Pallinghurst partnership, and then use that as a bit of a segue, because they have an offtake or marketing relationship with Nouveau Monde. If we could just kind of conclude with some comments on graphite and that investment.
When all our guys were back on the school bench learning about battery materials, it became very clear that while it is new for us, kind of mining, the people are coming at it from a mining angle. Some people have actually been dealing with battery materials for many years, and they've been dealing with the battery makers. And Traxys is one of them. I mean, Alan Doctor, the chairman, is called Mr. Cobalt. He's trading more than a quarter of the world's cobalt. And Mark, the CEO, is Mr. Nickel. So you suddenly have a company that already making those deals with the battery makers. So we are coming from it from a mining, private equity, processing part of view. So we can take it up the value chain to a certain point. But suddenly to add a Traxys to it that actually is dealing with the last link, which is the interaction with the ultimate customers of the products. We found that a very fruitful discussion. So we had a number of meetings in New York, and it really started 2 years ago where we started discussing this. And first of all, they are a fantastic group of individuals, very dynamic, very forward-looking, obviously extremely smart and knowledgeable in the area of battery materials. So it was a natural in some way to form a partnership with them.
Okay, and Nouveau Monde, if we could just talk about that. You've been invested, quite a bit longer already in Nouveau Monde. If you could just kind of talk about I guess how you entered that and your view on overall the kind of the graphite investment and market.
So we identified two areas where we believed that we could make a difference, and one of them was lithium, and we had talked about that, and the second one was graphite. Both are kind of niche areas, and they are areas where the supply chain is very dependent on China. And I don't form a view, I'm agnostic about that is particularly is China, but there is a high concentration in one country. And I think that whenever supply chain management comes to the forefront, to be reliant on one jurisdiction bears certain risk. And we believe that in creating a supply chain that can supply the battery materials and is based outside of China, that there is a benefit in that. So graphite, when we came out of the school bench that I mentioned before 2 years ago or 3 years ago, we went around and looked at pretty much every graphite project known to mankind. And again, we got intrigued and fascinated by Nouveau Monde. It has a very, very large deposit. It will be the Western world's largest producer. It has a very high quality. And again, when it comes to graphite, it's not about what grade is in the ground. It is how easy can you get it from that to 99.95% purity. So it is the journey, whether you start at 5, 6 or 20% is kind of inconsequential. It's how easy is it to work with to get to this high purity. And the thing that we really liked about the flakes coming out of Nouveau Monde was that they are some of the best that is known, and the ability then to add further value to it through spheronization, purification, and coating ultimately means that it is building blocks that are enormously consistent and of very high purity. So again, we have now in the making a 100,000 tons operation in 2 hours north of Montreal, and we now have a plan for beneficiation to take place in Bécancour on the Lawrence, again where one of the partners that we have there is Olin Chemicals, which are producing big chlorine player. And instead of transporting chlorine up to do the beneficiation up at the purification up at the mine site, we are bringing our graphite down to an industrial area where there already is a big chemical plant, so we don't need to transport chemicals. And we will initially put our plant within their facility and ultimately next to it with pipelines going in and going out again. So it is managing carbon footprint, and it is managing risk around chemicals, and ultimately it's about producing a high quality, consistent product for decades to come.